Hello traders and welcome to another weekly Forex market forecast. Starting off with the dollar index as usual. We have been expecting last week to see some volatility, which is what was the case, with the bias remaining in favor of the US dollar. As we started the week from these levels right here, we have seen a correction down, a spike up with the Fed, then a down move again, and with the NFP on Friday, we see the push higher, which it was expected anyway. So for this week ahead, we are still biased towards the upside for the US dollar. It has still room to go up towards this area right here. And from there, we can either see a correction or, depending on the price action, we will reevaluate the next time. Regardless of the case, we are still in the cycle from 28th of December 2023, and the dollar should continue to go higher for the next week ahead. Now, for the dollar yen, which was here last week, we have said that it's not complete. We have been expecting the pair to trade higher anyway. It opened with the week with a correction. Okay, as you have seen in the introduction, I have explained the analysis. Okay, we have got a 3 waves pullback. Buyers re-entered again from the Fibonacci extension area. So for the next week ahead, we are still biased towards the upside for the dollar yen. It can see a small correction up towards the at least this area 150, 149, 500 area before we see any possible reaction or reevaluation of for the euro dollar. As you have seen last week, we have expected that it should continue the downside from the cycle from 28th of December 2023. We have got a down move, a spike, and then a big down move again, which was a trap for many of the retail traders. We are still expecting, as we have said, the euro dollar to reach at least the 107 area right here, possibly breaking this low before we could possibly see some type of correction within the next couple of weeks. For now, the bias remains to the downside in favor of the US dollar and more euro weakness. For the pound dollar, we have been expecting from last week to start seeing a drop. The pair has dropped, spiked up, and then dropped with the NFP, which was expected anyway. We have mentioned previously this range right here, which is an accumulation of the market orders, and we have been anticipating to see the pair to drop towards at least the 125 area. We could also possibly be starting a next bigger cycle for the pound dollar, which remains to be seen. However, for the time being and for the next week, we should still see maybe a small correction and drop again. So the bias remains to the downside. For pound yen, we have been expecting the pair last week to possibly give us a small push higher as an ending structure before the drop. Instead, we have seen on Monday weakness getting started. So what we have done, we have updated our Telegram channel to the members. Obviously, this is a free Telegram channel, so in our premium service, you're going to be able to have daily updates and live sessions anyway. So we have mentioned that we could have possibly seen this drop anyway towards 124 area. Instead, it has actually reached 125. It has bounced. So for us, it still remains as a corrective structure lower. We can see a small pullback, another bounce, and a drop again in the next coming 2 weeks. However, this remains to be seen. So for the time being, we will not be looking for any new positions for this pair. If anybody was selling from this area, you should have at worst case scenario break even by moving your stop loss. Otherwise, you would have taken partial profit, or you have closed for full profit at this area, depending on how you trade. So for the time being, we like to wait to see the price action for the pair before reevaluating and taking any other next trading decisions. For the EURUSD, we have expected from last week to see the pair continue higher. Instead, it has given us a bigger pullback. It has reached the Fibonacci extension area right here, and the upside has been resumed. However, what we can see possibly next week for this pair, we could be possibly seeing a choppy structure, which remains to be seen before a next push higher. However, at this stage, if anybody didn't bought at this area right here, which I have said in the last week's video that as long as we are above this area, we are good to go up. You shouldn't make any new trading decisions at this stage because both possibilities can exist. So for the time being, we want to monitor the price action in this market and see what we can take next for the next week ahead. Now for gold, what we have expected from last week is to see potentially a small bounce before the next drop. Instead, it has pushed a little bit higher. However, we have clearly said that as long as we are below this RSI trend line, we should not be looking for any buy opportunities on any pullbacks in gold because the bias remains choppy and to the downside because of the US dollar strength. So we have clearly seen that. As you can see, it has bounced and then we have got a big drop on Friday due to NFP. What we can expect next is possibly a small correction right here with more continuation to the downside towards this area right here, 1980s, 1990s area. However, if anybody was not selling from this bounce, it shouldn't be looking for any trade setups. As you can see, gold remains in a very choppy cycle correction right here, so it doesn't give us any clear setups. So instead of trying to guessing and taking excessive risks, we prefer to stay on the sidelines. But again, the bias remains to the downside, so we will be not looking to buy by any means or any setups that we can see at this point. Now for oil, we have said that this is a corrective cycle. We have been expecting this bounce to fail. It has reached the Fibonacci extension area, which has reacted very strongly, which was one of the possibilities we have mentioned. And we can also see that it is breaking below the price trend line right here, and also in the RSI trend line as well, it has clearly broke below. So for the time being, the highest probability chances for oil is to continue the downside, possibly a little bit more downside before a bounce, and then we should most probably see a continuation lower and highest probability to break below the 68 area, which was the most recent low. So for the time being, we are not looking to buy by any means oil. It's still within a bigger cycle from March 2022. For those that really want to see the bigger pictures and stuff like that, we are trying our best to start our premium service hopefully by the next week. You should get some updates by Omer tomorrow, I think, on that. So by any means, for the short term, for the next week ahead, we can still see continuation lower, bounce, and continuation lower for the upcoming weeks. So we will be not looking to try to buy oil at this stage. Now, for the SPX S&P 500, we have said last week that we are entering into a stage of unending structure. We have got the pullback, another spike up, which has made a new high. Despite of that, we are still in massive divergence right here, which is the indicator, one of the indicators that we can see for the ending structure. And we are expecting at least the cycle from 27th of October 2023 to be ending very, very soon within the upcoming week, potentially. So we will be start looking for this pullback very soon, like I said. So we are not going to be looking for any buy opportunities in the indices and the S&P 500. So we should be cautious, and this is what we can expect next, as we have said. NASDAQ, similar idea. We have been expecting for the last week that we could see an ending structure. We have got a bigger pullback as well, another bounce. So what we can see next, it's weakness to arrive in the indices as we said. So the cycle from the end of October 2023 should be giving us at least a 3 waves reaction pullback. So we are not going to be looking to chase indices higher by any means. So this is what we can anticipate next. From the ETFs, the three Qs, similarly to NASDAQ, we have said last week we are actually entering an ending structure. So we have received the drop, the bigger bounce. So what we can see next week, very similarly, it's for this to give us some sort of weakness. It could potentially give us a small drop, another spike up, small one. We had a lot of earnings actually last week, so this is why indices have been giving us more of an ending structure, and they haven't started the pullback yet. However, with the upcoming week, we can see the possibilities increasing, so we should not be looking to buy indices or the 3Qs from the ETFs. Okay. And tomorrow, stay tuned, guys, because Omer will give you some information of what to expect from my end with the launch of our premium plan service, which you're gonna get a lot of value and learn from my unique analysis and the things I have developed over the years. And at the same time, we have also the link in the description for our cashback program by One Royal. For those that didn't saw yet our first episode from the educational series that I'm doing, it's uploaded on the channel from yesterday, so you can understand certain things that not many people know, and why we recommend the specific brokers we have in the description. And exclusively, we have a deal with the One Royal for cashback, so you are going to get one of the best trading conditions and at the same time save money on your trading costs, which is a monthly cashback that you're going to receive back into your trading account, obviously as long as you are actively trading during that month. We do not have any minimum deposit requirements. We are not one of those affiliated marketeers that they will make money on your registration. We have actually the deal that we have is because I trade with them for a long time, and they allow me to provide to you guys some cashback on your spread or commission. So it's going to be much more beneficial for you anyway, because you're going to be trading in a real market. There are more than 15 liquidity providers, very good trading conditions, extensive product list. You can see it when you sign up with the link in the description. If you have any questions, send us an email. Feel free to send us an email at support@moneymarkers.net, and we'll get back to you within 24 to 48 hours at the most. So with that note, I wish you a great weekend ahead, and hopefully you have been taking value and learning things with this weekly Forex forecast. Leave us a comment if you like to give your feedback, and we'll be seeing you in the next week.